everyone, and thank you for tuning into the North Main Minute. I'm Joshua Doby. A foundational planning question with which we're dealing literally every day here at North Main Financial Group has to do with the broad subject of retirement. Now, I'm going to be talking more about the front end of retirement, let's say just before a formal retirement date in this particular segment, but there are dozens of other important points that you need to keep in mind when it comes to the broad idea of retirement planning. Due to time, I'm not going to get into those right now. Just looking at a couple of salient points in that space just before you actually declare a more formal retirement date. First thing you want to do is be aware of the environment around you. We've had in our equity markets, as measured by our most popular indices, pretty significant amount of positive movement here recently. However, if you scrape away some of that layer of the proverbial onion, you will find that it's actually a relatively small segment of equities which have done very, very well, which are covering up for perhaps other equities which have not done as well. It's one of the weaknesses of looking at stock indexes. Has always been true. It's not a new phenomenon, but you want to understand that relative to the market, which brings me to the second point. Be leery about chasing hot investments. That's true whether you're looking at the front end of retirement, in retirement, later stages of retirement. You want to be leery about chasing the hot things. I know it's tempting. I know we as an investing public think in straight lines. We do. We do it every cycle. When it's going up, we think it's going to go up forever. When it's going down, we think it's going to go down forever. We really do that. So just be leery of that. Be mindful of that when you're making your investment choices, because you're changing from that accumulation phase to the distribution phase, meaning from accumulating in a portfolio to perhaps using that portfolio for income. So it takes on especially more important relevance when you do that. Third big item, recognize again, coming to the environment. In that environment, we have higher interest rates now. This is really something that's unique in the last 15 years. It's not unique to us relative as an economy. We just haven't had this kind of scenario in the last 15 years where we've had legitimately interest rates above zero. So not so great if you're applying for a mortgage or an auto loan, but my goodness, if you're looking at CDs, treasuries, other fixed income instruments, you're actually looking at some possibilities of return. So when you're looking at your asset allocation, you actually have some increased possibilities from where we sit than you may have had here over the last several years. And that's important to keep in mind, not because that should be what everybody does, but it just gives you a broader base of possibilities when you're looking at asset allocation inside your portfolio. If you'd like to reach out to us at North Main Financial Group, take a look at your overall asset allocation. Perhaps you're looking at retirement in the relative near future. Perhaps you're in retirement and you want to make sure that you're allocated correctly, especially relative to the new environment in which we sit. We'd love to hear from you. NorthMainFinancial.com.